On Monday, the big four banks were worth collectively $431 billion. Now they're worth $392 billion, a fall of almost $40 billion or 9% in 3 days since Tuesday's rate hike. For context, they've lost the value of Woolworths. Now the why is a bit harder to work out than the what. Banks tend to do well when rates go up because their profit margins widen. But if there's a recession, there'll be bad debts. And then there's this chart. Households now have $1.25 trillion on deposit, so every 0.5% increase in the interest that banks pay depositors will cost them about $60 billion. Now, they haven't done any of that yet, while promptly increasing lending rates by the full whack, of course, but some smaller banks are raising deposit rates already, so the big four probably can't hold out for long. And also, it won't be just the 0.75% we've seen so far. The futures market is now betting that the cash rate will be 4% in the middle of next year, so 3 and a bit % higher, which would cost them hundreds of billions of dollars in extra deposit interest. Now, that'd be okay if they could recover that from borrowers, but loan growth is probably going to fall off a cliff as well. Apart from the banks, there were fairly big falls by BHP, Wesfarmers and Qantas, and the share market fell 1.5%. The New York market fell 1% last night and the oil price jumped 2%, which contributed to the slumped shoulders on the share market. And the Australian dollar eased back to 71.7 US cents. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.